Welcome back. I'm here today with Tim Sanchez. Tim is a director at the New York Stock Exchange, and you're employed here in the San Francisco Bay Area. Is that correct?
That's correct.
So, Tim, welcome to today's show.
Thank you. Good to be here.
So, Tim, give me some background, how you got to where you are today. And
I'll try to keep it short and sweet. So I've been with the New York Stock Exchange about 5 years in our Silicon Valley office. A lot of people ask, well, why do you have an office here when the exchange is based in New York? And the reason is that we have a capital markets listing office here on the West Coast, which I'm a part of. And what that means is we compete with NASDAQ for the listings of Silicon Valley IPOs. It's a very lucrative market. Companies like Twitter, LinkedIn, so on and so forth are listed with the NYSE. And those relationships are developed out of our office. Once West Coast companies are listed on the exchange, or if they're currently trading, then those relationships are managed out of our office as well. So I work closely with about 275 West Coast publicly traded companies whose shares trade on the New York Stock Exchange.
now you wish them, were you involved with the Twitter IPO?
I was. That's my account, my relationship. In fact, I was down on the trading floor the morning that they rang the bell and their stock began to trade. So it was an exciting time for us down on the floor of the exchange, and certainly an important IPO that we were able to capture for the big board.
Now, you have two MBA degrees, Columbia and Berkeley School of
Haas School of Business.
Haas School of Business.
Right.
Now, tell me about that program.
Sure. Well, it was a partnership that was entered into between these two fine schools, and the idea behind it was that both schools have strengths and are known for focusing on certain areas of business in which they're really strong. And so the idea was to come together jointly, create a program, a bi-coastal program that could take the best of both programs. In the case of Columbia, it's known as a factory for producing finance MBA specialists. Berkeley has an amazing real estate program, entrepreneurship program, being close to Silicon Valley. So that was the idea behind the program. It took a little longer than a normal MBA program, but it was great. We got to travel back and forth between these two great campuses.
So how did you get to where you are today?
Sure. So I grew up in the Bay Area, product of the streets of East Oakland, a rough area, but I had two great parents. Father was a minister, so he kept me in line on the straight and narrow, so to speak. But I just wanted to be the first in my family to pursue an education and to do something a little differently than what's been done in the past, historically and by tradition within our family and people that grew up in my certain neighborhood. I just had a dream of wanting to pursue a career on Wall Street. And I think it all started with a visit back in 1983 that we made to the New York Stock Exchange. It was an impressionable moment for me at the time as a young teenager. And so I just pursued my education. I started my career back in the early 90s with Lehman Brothers when it was around. Spent 5 years with Lehman, moved on to what was then called Solomon Smith Barney. Spent 5 years in equity sales there. And then took my shot at Silicon Valley dream by being a co-founder of an internet company back at the height of the internet.com boom. And of course, things didn't work out like a lot of other companies. We crashed and burned, but it was a great entrepreneurial experience. Went on to co-found another company and then decided to pursue a graduate education and then eventually made my way back to finance by joining the New York Stock Exchange. So it's been quite a journey.
So your education for the MBAs happened after a period of time of...
Absolutely. And then mixed into all of that, I'm a naval officer in the reserves. So 9/11 impacted my life in a big way. Like a lot of Americans, I felt the need to do something. And so I pursued a commission in the reserves. And a week after I received my MBAs, I was on a plane headed towards Iraq and Kuwait and volunteered for my first deployment. And in 2012, volunteered for another deployment and returned last May. I was in Afghanistan for a period of time. So that's it for deployments. I feel like I've done my part, but it's sort of a second career I've had as well along finance, which is to serve our country and to contribute in some way.
Now, I understand you're a lieutenant commander
That's
in
correct.
the U.S. Naval Reserves, and is that as fun as it really sounds? Or
It's a lot of fun. I do my 1 week in a month duty. I play Navy 1 week in a month and commit 3 weeks a year to annual training, which is active duty. And of course, I've had 2 deployments in the last 6.5 years, which has been a challenge. It's been exciting, dangerous at times, certainly a strain on my family life, but my kids are all the better for it, as well as my wife.
Tim, we need to take a quick break. We'll be right back after these messages.
I love fishing, with my family.
I think it would be easier to use a net.
It was so much fun.
The times when we are together, it makes it all the more worth it.
Having Dad teach them how to cast a fly rod, and
as long as we're doing stuff together, we're having fun.
Some people see a father and a son fishing together, while others see a succession plan. Welcome back. I'm visiting here today with Tim Sanchez. He's a director at the New York Stock Exchange. And, Tim, as we were going through your career history, you mentioned that you worked at both Lehman Brothers and Smith Barney. And in what way were those jobs similar? What was it like in the banking industry?
Sure. Well, I cut my teeth with Lehman Brothers, and it's pretty sad to know that Lehman no longer exists. But I was there back in the fun days, early '90s, in which the firm was actually spun off from American Express at the time. So I got to experience those early days of Lehman becoming a standalone company once again. And I worked in San Francisco in our institutional sales office and our private client office. So we managed assets for high net worth families, as well as small to mid-sized institutional accounts. And back in those days, in order to earn a desk, so to speak, which was just a phrase for landing a real job, you had to prove yourself. As a salesman, you had to prove yourself that you were capable of managing money, following the markets, and I worked under some incredible institutional salesmen, learned how to sell, learned how to develop confidence and present myself to wealthy clients who were far wealthier than I could ever imagine. And it was just an incredible time to be a young professional working at such a great firm, working with some experienced salesmen and money managers who managed money for some of the wealthiest families in the country. And it was just an eye-opener. And I spent 5 years there working under the tutelage of some of the senior members of the West Coast office.
So in working with differences between the two, between Smith Barney and Lehman Brothers, are there in what ways were they really different from each other?
People who are on the outside don't really understand that there is such a thing as a culture of a firm. And that was never more evident than back in the 1990s when you looked at Smith Barney, which historically had sort of been a white shoe investment bank, extremely conservative by nature. Partners ran the firm and they had been there for years. And it was just a very traditional, very conservative organization before Sandy Weill bought the firm under the old Travelers umbrella. And Lehman was very different. Lehman was an aggressive culture, very fast, aggressive, cutthroat in many ways, but had more of an entrepreneurial bent to it. And so it was quite a contrast to leave Lehman Brothers at the end of 1994 and join Smith Barney. I felt like I was a fish out of water. Eventually became accustomed to Smith Barney's culture and spent 5 years there working with one of my partners in the San Francisco office and had a great time.
How was it with the moving out into the private industry with eCaravan and BestMatch? How did your experience at the investment banking firms help or prepare you for being out in the private sector?
Well, it was quite a challenge because I was used to working for 2 well-known investment banks. I had a pretty good career on track. Certainly was making more money working for those firms than as a struggling entrepreneur. But This was back in the late 1999 at the height of the internet bubble, and I was dealing with lots of clients who overnight developed or acquired huge fortunes in the dot-com bubble. And I thought, well, if these guys can do it, so can I. So I hung up the suit and tie, hung up the wood-paneled office, and decided to get together with a couple of friends. We raised money with some angel investors and a small VC, and gave it our best shot. And it was great, because I think what Wall Street did is it toughened me up over those 10 or 11 years. It allowed me to develop thick skin and have a sense of focus, discipline. And that certainly carried over to the entrepreneurial space, where there aren't any rules. You really need to be disciplined. You got to have thick skin, because it's quite a roller coaster ride. And for every Google or Twitter that people hear of, there are thousands of failures out there, and it's a very difficult life, the life of an entrepreneur in Silicon Valley.
Tim, we need to take a quick break, and after we come back, I'm going to talk about the New York Stock Exchange, your position here in Silicon Valley, and what some of the things that you deal with day to day. We'll be right back after these messages.
With current laws, we have left our children an enormous financial burden. Even though they may be too young to understand it. At GROCO, we care about you and the ones you love, and the quality of your and their lives. Call us today to see how we can help. 877-CPA-2006.
Helping you along the way.
Welcome back. I'm visiting here today with Tim Sanchez. He's the director at the New York Stock Exchange. And Tim, we've been visiting about your history, through your career paths, and also you dabbled a little bit in moving from the investment banking industry with Lehman Brothers, Smith Barney, to private industry, starting up your own companies, and then you roll back to the New York Stock Exchange, which we always see this in the news, the New York Stock Exchange, this and that. But for the sake of the viewers, what exactly does the New York Stock Exchange do?
That's the question I get almost every day. A lot of your viewers and most Americans who follow the markets see that grand building, that iconic structure located on the corner of Wall and Broad in New York. And I think most Americans have a sense of what goes on down there on the trading floor, but they don't truly understand that the New York Stock Exchange is an organization, institution that's been around since 1792. And it was formed under what was called the Buttonwood Agreement. And so it was an agreement that allowed brokers to earn a commission by trading shares. And that's sort of our founding. And what we do is we've created a trading platform that allows companies to tap into the capital markets, trade shares, and we maintain a fair and orderly market in over 2,300 listed companies who have chosen to list their shares at the New York Stock Exchange. So down on the trading floor, what you see every day when that bell rings in the early morning hours, what happens is that we've created a marketplace which allows these companies to exchange their shares, allows investors to buy and sell. And so we've created the infrastructure, if you will. The New York Stock Exchange is the infrastructure that allows these companies and all of the firms that have a presence on the floor to trade during those hours. And so that's what we do. And we've been doing it well for a number of years. We're the largest global exchange. And if you look at the market cap or the value of the companies that are listed on the New York Stock Exchange, it's larger than the five next largest global exchanges around the world. So it truly is the largest marketplace and the face of American finance and capitalism.
How does a company get to be listed on the New York Stock Exchange?
Well, there are a couple of different ways. A company can transfer from NASDAQ, which is the other exchange in the United States, or if a company goes public via an IPO, they get to choose their listing venue. And it's either going to be NASDAQ or the New York Stock Exchange. We have listing standards, so there are requirements that a company has to meet, and there are a number of requirements based on shares, value, equity tests, assets, liabilities. Once we review the application, we will then approve a company's listing, And then when they go public, the stock begins to trade on the floor of the New York Stock Exchange.
Can a company choose both? I mean, is it possible to do
There are a few dual listings left. That was an experiment that NASDAQ came up with a few years back. And they did it in a way the purpose was to create some competition and steal listings away from the New York Stock Exchange. The reality is that nobody takes advantage of that anymore. There's really no reason to have your shares listed on two exchanges.
So what's the difference if you're trying to give the pitch of New York Stock Exchange versus NASDAQ? For the layperson, it's like, well, I'm using my Schwab account, or I don't know where they come through, but what's the difference, or what's the pitch of why they should choose one versus the other?
There's two reasons why I tell a company they should list with the New York Stock Exchange. One is the visibility that we bring to the table. So our companies are able to leverage the spotlight that exists every day on the floor of the exchange. There are 39 global news networks that broadcast over 200 times a day from the trading floor. There truly is a platform that allows for global visibility. We allow our companies to take advantage of that via interviews, events on the floor, or ringing the opening or closing bell. May not seem like much, but when you have an opportunity to have that kind of spotlight, it's priceless advertising that a company is able to take advantage of. The most important reason is the way in which our stocks trade. So they used to be called specialists. They're now called designated market makers. We have firms on the floor that create this human element that doesn't exist on NASDAQ, which is an all-electronic exchange. Technology is great, but as we all know, technology breaks from time to time. And as a result, it can be catastrophic for a lot of companies when that technology breaks. On the floor of the New York Stock Exchange, these designated market makers, they're humans, they're real people. They use technology as well, but they have the ability to step in and to intercede when necessary and take over trading. They also have to commit their own capital, which is a huge difference. They're buying when others are looking to sell, and they're providing liquidity when others are looking to buy. That's a feature that you don't find on NASDAQ, and that's why NASDAQ-listed companies tend to be a little more volatile than New York Stock Exchange-listed companies.
What does a seat on the New York Stock Exchange cost now?
Well, it costs zero because there are no more seats on the New York Stock Exchange. A number of years back, the members on the floor who owned those seats exchanged their seats for shares in NYSE Euronext when we went public ourselves. Oh. So we used to be a quasi-public institution up until our IPO a few years back, and now we are a publicly traded company, and recently we were acquired by ICE, the Intercontinental Exchange. And so now we're part of a $20+ billion conglomerate, which owns a number of exchanges around the world.
I'm visiting here today with Tim Sanchez. He's a director on the New York Stock Exchange. And Tim, what can you share with our listeners about today's economy?
Well, it's an interesting economy that we're in the middle of. It's one in which the stock market and the valuations that we've seen, the returns that we've seen, don't accurately reflect what's going on day to day in the economy. Without getting too deep in terms of true valuations, because I'm not a predictor, I would just say that this economy is struggling, continues to struggle. I know that there are a lot of positive headlines out there. I just don't think the stock market reflects the reality of what we're facing in terms of high unemployment, which I would argue has become normal now. I think the country has sort of accepted the fact that the new norm will be unemployment in the 7 to 8% range, which 10 years ago it would be twice what we saw 10 years ago. And so I think we're struggling. I think we're still trying to figure out a way to develop a footing in this economy, and I think it's going to continue for quite some time. We've got some major structural issues we've got to deal with.
Tim, thank you for being on today's show.
Great, thanks for having me.
Visiting here today with Tim Sanchez, director on the New York Stock Exchange. We'll be right back after these messages.